Thank you. Thanks, everyone. It's a short session, and I hope to make it super enjoyable. I want to actually talk about a very interesting topic called banking as a service. So, as I was introduced, I'm co-founder CEO of Nium. It's a company I set up back in 2014. The origin of the company was all about cross-border payments, and we saw a very interesting inflection point about everyone wanting to be a financial services company. So, let's take a great example close to a house, like Grab, right? How many of you have recently read anything about Grab talking about drivers or logistics or moving things? It's always about financial services. It's about Grab Pay, Grab Insure, Grab becoming a bank. Why? Because they built a great distribution infrastructure. And what I'm going to talk about for the next 10, 15 minutes is why is banking as service critical, and why do platforms play a very important role over the next few years or so. So let's just quickly jump into the slides and see exactly what I'm talking about. Bear with me as the slides come on. Perfect. So if you really think about banking as a service, right, why do you need banking as a service? I think the most critical element missing today across the world is the number of people who don't have access to any basic financial services. So it could be somebody who is in Asia, it could be somebody in Latin America. 2 billion people don't have access to financial services, and a large chunk of them actually reside in this part of the world. And as you can see, this is not an easy task at all. Right? Because if you imagine, look at markets like Philippines, Indonesia, India, for example, a lot of people don't have access to basic financial services. And this, if you think about it, is the biggest aspect, like financial inclusion, access to financial services, is what a lot of fintechs are trying to solve. Someone's trying to lend, someone's trying to issue a card, someone's giving you a bank account. But that's what we are trying to solve, which is giving access to financial services, not only for the middle class and the rich, but also to the lower strata of the society. So why and how and why do we serve more people, right? Like let's kind of break this out into the most simplest possibility, right? Like, we talk about, there are so many people without access to financial services. Does somebody who makes $50 a month, does he require something like a wealth account? He doesn't. What he requires is a basic current account to get his money, basic insurance to basically cater to his medical needs, etc. So if you really break this down, there are very simple things which he requires. So one is a savings product where he can actually receive his money, keep the money in place. Second is credit. Credit, as you can imagine, if you look at most of the emerging markets, two things actually lead to people taking debts. One is medical issues because you're not covered by insurance, and then second, though it may sound very funny, but it's actually marriages. Right? A lot of if you look at India as a statistics, a lot of people actually get into debt primarily because of trying to get their son or daughter getting married. Payments, insurance, remittance. Right? These are again 4, 5 key pillars what somebody requires today to be able to offer services to this strata of the society. Right? Now let's look at what and why there are other people trying to get into this kind of business, right? And I actually put out the data. I hope people can see it clearly, but Facebook today has access to such a large market segment. So if you speak to somebody of the lower strata, if you speak to somebody who doesn't have financial inclusion of a bank account, do they have a WhatsApp account? Yes. Do they have a Facebook account? Yes. Do they have an email account? No. Right? So you're seeing how the world is basically changing. If you move this across to, say, Apple has 1.2 billion device users across the globe. So what these large tech giants have done is that they have created such a massive distribution network. And this distribution network can actually ride into helping people break into financial inclusion. So think about TikTok, think about BigGo, think about ShareIt, right? How many of you know the ShareIt app? ShareIt is like a large emerging market app. 500 million monthly average users, right? Take a deep breath, look at that number again. It's 500 million monthly average users. And what do? They're sharing documents, games, etc. via the app. Where are the users? They are in Indonesia, they are in India, there is Brazil. These are like some of the big user bases. Now imagine for these large tech clients, they don't need to go acquire customers. Their core products actually help them acquire customers at core. And what they now want to do is envelop financial services around their customer, which is a super important and an integral part of what they want to do. Let's go to my next slide. Okay. Now, that's the primary reason. So I kind of give you a background like, the world has 2 billion people without any access to financial services. What do people need? Who are the guys who are best served? And that's what we're seeing more and more in this space. So what is happening, right? Google is offering deposit accounts in the US. If you see what's happening with Facebook, Facebook's come out with their crypto called Libra. Libra basically is focused on large remittance corridors to be able to help support people, especially in that strata who don't have financial inclusion access. Apple has now developed its own credit card closer to home. AirAsia, what they're doing with BigPay is absolutely amazing. Grab, what they're doing with financial services. Right, going back to the example I gave you, remember you have to actually think that Grab started as a logistics company. They don't talk about logistics; it's all financial services now. AirAsia, the way travel is right now, there's so much of talk about big pay and how big it can become. And I totally believe the fact that people with large distribution platforms can become really large financial services platforms. Right now, having said all of this, now I think I'm going to break into the most crucial part of the topic, which is we've now established there are a lot of people who require financial access. Social media, big tech firms can provide faster inclusion into it. But the key thing is, so do such brands become a bank, or do such brands build their aspect? And the answer is no, right? Because large big techs struggle with anything which is compliance, regulatory. Unlike somebody like a Google makes billions of dollars of profit, they'll actually risk all that profit, because if there is a fine, if there is a regulatory nightmare, AML, anti-money laundering, terrorism financing, none of this impacts them today because the core business is search or display or email or etc. Right? And suddenly when they come into financial services, they could actually be impacted with this. So that's where people come onto a platform called banking as a service, where a service provider provides them the full stack for banking, and what they bring in is their large distribution network. I'm going to attempt to change my slide and okay, perfect. Right? Hopefully you can see the screen. So what is banking as a service, right? So banking as a service is nothing but the fact that there'll be a brand. Now let's call it Google, Facebook, Grab, etc. There'll be a service layer which will be brought to you by a specialist. Let's take Nium as a specialist, who will provide you the user interface, who will provide you the compliance layers, the FX, the payments, the treasury, the whole aspect of it, right? Now this varies from market to market. In markets like Singapore, in markets like Hong Kong, Australia, etc., the license holder and the banking infrastructure layer can be the same platform. In markets like Indonesia, where you can't provide like a savings account, etc., you need to actually work with the bank where you need to be on top of it. That's where the license holder comes in. But imagine this. So why would a Google want to do this? Is pretty simple. They don't have to risk about getting a license, getting a regulatory thing put in place. What they're super focused is on their customer base and how their customer base is going to add significant value to this, and how it is so simple to actually build a financial services product without really knowing anything on the financial services side. So why do people choose BAAS as a product instead of getting your own license? Quicker go to market. So you can take anywhere between 6 to 12 months to go live on getting your own license, building all technology. In fact, longer, 18 to 24 months. But if you do it on a BAAS platform, in fact, you can go live as fast as 3 to 4 months, in fact, even faster. So the speed to market is a big element. Second is collaboration, right? Like if you're going to work with a financial services entity, say if you want to work with like somebody like Nium, what we do day in, day out is payments, anti-money laundering, counter for terrorism financing. Those are things which are core to our business. right? And that's why we come in with all that understanding. So helping you collaborate, taking you through that makes it very, very specific. And of course, specialization. So we are there in the market to give you guidance. So if you are trying to onboard a customer in say Singapore or Australia, and if you the customer is going to load below $1,000, you don't even need a license for that, right? So there are a lot of these nuances which we can bring, and that's largely because of the specialization we bring to the table, right? So if you choose the banking as a service product or a platform, for you to launch a global financial services platform is this easy. You design the experience, that's the UI, UX, that's where big tech is really amazing at. Integrate with the app, which is the financial services APIs which come in place, then that's it, launch. The launch times can be drastically reduced. And I think that's the big value which we see more frequently coming into the space, because it can be reduced as significantly into few weeks, few months. Any of the large new digital banks which are going to be announced in Singapore, the earliest they'll be able to launch a product is 2022. But if you use a banking as a service stack, you can actually leverage and deploy a product as early as Q1 next year. Okay, so who's ready to build a digital bank, right? And we went back and we said, hey, what are the products that people look at when you talk about building a digital bank? So it's domestic payments, digital KYC verification, multi-currency wallets, FX, multiple market reach, being able to create in multiple markets. And you can do this whole segment without even talking to a bank, right? And I think that's the biggest differentiator what is going to be. So if you look at it, I strongly believe that there's a lot of opportunity in the Asian markets for more banking as a service players. There are quite a few limited players right now in the market. Imagine players who can actually provide the right infrastructure to be able to cater to markets, right? Markets such as Vietnam, Thailand, etc. These things don't exist today, right? It's largely run by the big tech or it's run by banks. So there's a great opportunity to build a banking as a service infrastructure layer across multiple markets in Asia Pacific, and this is something which no one's done and which Nium is on its embarking to do in multiple markets right now. So it's a very amazing experience. You can build a bank or provide banking features. You can plug into lending marketplace. Imagine, right? Like you went and you bought something and suddenly you get a message saying, hey, can I split this into 3 transactions using an API of another buy now, pay later platform, right? So these are super interesting things, and this can be bought through this open API modular infrastructure, right? And at the core, right, and I want to leave everyone with this, is that at the core, and this I think everyone should know and remember, is that everyone is going to be a fintech, right? And that's the main hypothesis you will see playing out over the next 2 to 3 years, where everyone who has a large distribution infrastructure, everyone who has a large setup, everyone who has a large, it could be a telco, it could be a social media firm, it could be an online travel agency, it could be a big tech, it could be an e-commerce firm. Anyone who has customers will become financial services, right? A bit about Nium. I've got a minute and a half, so let me cover a bit about Nium. So we've been in the market since 2015. It's move about $6 billion a year. Being a tech company, we closely check how many API calls we do on a daily basis. That's about 1 million. So that's somebody checking FX, somebody doing payments, etc. We're Singapore headquartered, but about 10% of our revenue comes from Latin America. So that's how widely spread we are. In fact, next week we announce 4 Latin American new banks using our platform. What we provide, so this is our banking as a service stack. So once you plug into us, you can access currencies across 40 different markets. You can then do 3 core activities: pay in, pay out, and issuer processor. So pay in is collecting money, which is either through a bank, a card, a wallet, etc. Pay out is nothing but disbursing money through a wallet, card, cash, etc. And issuer processor is we'll give you a Visa or a MasterCard in multiple markets where we are licensed and regulated. And we've got compliance and FX as a service as well. So the way we built the stack is completely modular. But if you merge all our platforms together, you can actually build a bank, right? And more, as I said, This is the way we see the market scaling. Anyone with a large distribution network will become a fintech. And I think that's what I'm going to sign off by saying everyone is going to be a fintech. Just wait and watch. Thank you very much.